This market is telling you what it's going to do. You have to be able to learn and read that, and then you can start being successful in the markets. My name is Christopher Ewell. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now let's get into the lesson of the day. All right, so this video here is called a 400% opportunity flame emoji. Best stock to buy in 2025. Hashtag chips, hashtag Intel, hashtag Nvidia. Let's see what they have to say on this.
I've kicked things off with this funny video of Will Smith chomping spaghetti titled Intel chips on one side, Nvidia chips on the other. It's meant to perfectly illustrate the epic fall from glory that Intel has experienced in the last couple of years. The stock price is now down 75% from all-time highs. And today,
wow, I didn't realize it was down 75%. So what is that? INTL. No, that's not right. INTC. INTC. There we go. 75%. Now it is coming down to this order block right here. And these order blocks are really, really cool, right? So in fact, this is a great example. This is the best way to ever determine support and resistance, right? See, around here in September 2024, it created this order block. These are large institutional orders waiting to be filled. Price went up from that point, created an above overhead resistance order block, came down. The very first time it came back, in fact, let me make this bigger for you. The very first time it came back into this area right here, bounced right back up. Now it's back inside of this order block. So these order blocks are super, super cool. That doesn't mean that it's going to go back, rocket ship right back up, but it does tend to work really well as support and resistance areas right there. But to his point, Intel is down 75%. Hang on, lots of order blocks up there. Remove all segments. Let me measure this. So 63% here, but of course there's some overhead price action up there. So it's down 63% just in 2024, basically. So huge movement down in Intel. Whereas Nvidia, so that was Intel for 2024. That was Intel for 2024. Nvidia for 2024, we're looking at like a 215% gain. So yeah, between those two stocks, I think that meme with the spaghetti is definitely right.
I'm going to analyze, is this an incredible opportunity? We're going to look at the risk to the reward, and we're going to look at the key levels in the charts today. I'm also going to cover some other companies that are going to be reporting earnings this week and next week, and a brief little overview of what's going on with the macro of the market in this coming week. This is the Stocks with Josh show. Thank you for joining me today. I see opportunity in Intel, but I'm expecting a further down move.
Okay. I was a little bit anxious at first hearing what he's saying, see an opportunity in Intel, but he's expecting a further down move. Well, the trend is definitely down, right? And so you've got to roll with the trend. What is the old adage? The trend is your friend until it bends, right? Right now, the trend is down. When I'm looking at a stock, the last thing I want to do is buy a stock that's in a downtrend, right? Because you could say, oh, what a great stock this is at $25. And then it goes down to 24. Oh, what a great stock. I love it even more at 24. I love it even more at 23, at 20, 22, 21, and 20, now $19, right? So just in the last from 25 to 19 is down 24%, right? Are you loving a stock that's down 24% if you bought it at that point and it's trending down and going down even further? I would say no. If it were me and I were looking at this stock, I would be waiting for it to flatten out, right? Flatten out and then start moving back up. And you do that by adding those moving averages in. But I also wanted to show this market cycle, right? This definitely looks like it's hitting the other end of the curve, right? Not moving up yet, but it's in like the panic, capitulation, anger, depression phase, if you want to look at it. I mean, just look at how this looks right here, right? If this is the left-hand side moving up, then this is the right-hand side. It definitely looks like we're in the anger, disbelief, depression stage down here.
We're getting so close to this company being very attractive and having a higher reward opportunity than what I would call a risk to the downside that we need to be watching.
Well, there's definitely still risk in this, right? I mean, it's still pushing down. But hopefully what he's saying is, you know, the reward could be so much higher than the risk. Because if you want to think of it in like whole dollar terms, right? You've only got $19 in risk where you could lose all of your investment. But in theory, it could double, triple, quadruple, and still be less than $100 a share. Actually, I do want to look at this inside of OVTLYR real quick, INTC. And so we just pushed a bunch of updates into OVTLYR just last night. So there's going to be a couple new things to show as well. So let that load real quick. I want to see what the signal is right now, if it's got a buy signal or a sell signal. Okay, here we go. So it's currently sitting on a buy signal, although not the greatest buy signal of all time. You've got the fear and greed, though. Like, it really looks like the fear may have bottomed out of Intel around late December and moving more towards greed, right? If I look down here, late December, moving more towards greed, which is what you want to see if you're buying a stock, right? You want it to have bottomed out on the fear and start moving upward. So maybe he's got a point there. Let's see.
Out for which direction is this stock currently moving? What is the trend of Intel right now? It's absolutely down. These guys have been.
Thank you. I watch so many of these videos, and they're like, the trend is down, but you need to buy as much as you possibly can right now. So I appreciate him. Hopefully, I haven't watched this video yet. Hopefully coming at this from a risk first perspective.
Getting punished, getting hammered, and they deserve it, because just like that intro video showed, they missed the mark. The technology wasn't where it needed to be. They missed mobile computing, and then they underdeveloped in the area of GPU as it relates to the AI market. They absolutely deserve to be at the share price that they're currently at, which is over a decade-long low, and what some would refer to as near liquidation levels. But there's reasons why this company probably won't go away, and I'll just start right off and give you one of them, and that's that they are on a list of exclusive companies that receive something called government subsidies. These are when companies are considered too big to fail, and the United States government is giving them your hard-earned tax dollars to prop them up, basically to reward them for being poorly managed and unsuccessful. Now, we don't give any rewards to companies that are crushing it like Nvidia necessarily, or Apple. I mean, I'm sure that they get their reward in tax breaks, which I know they do get. But companies like Intel are actually on a, what I'll call a corporate welfare list. And would you believe it that Intel is number 2 on that list for receiving the most subsidies out of any American company? If you don't know who number 1 is, I bet some of you guys could guess. It's Boeing, right? So Intel is just beneath them. And this is a company that's receiving billions of tax dollars to be given the opportunity to have a turnaround moment. Having said that, Wall Street still wasn't impressed with the way the company was being managed, and this thing has been under very hard selling pressure. But we're getting to a place where it might simply be too attractive to ignore anymore. And of course, I'm going to take you into the charts. I'm going to show you where the important lines in the sand are going to be and where it is I'm going to be watching for a moment to pick up and go long. Now, this isn't going to be a quick turnaround story, okay? And we really want to see some green candles before we get into too big of a position, but definitely time, perhaps this week, or perhaps this month, to begin to nibble on this company. It's getting very interesting, and I'll show that to you in the charts. I want to briefly talk about the macro of the market going into this week. We've got...
So far, I'm liking this video, right? I don't like every video. In fact, most videos I watch, I don't like. This one, I'm liking it so far.
Not this week, but the following week, January 20th, on Monday, is the presidential inauguration. And I think at this point, we could pretty much call it already and say that it's not a buy the rumor, sell the news. It's clearly been a sell the rumor, and we're going to have to wait till we get to Monday of next week to see if it's a buy the news. Now, I'm imagining as we go into Monday, Tuesday, and Wednesday, we're going to continue the trend that we've been in, which is to be continuing to the downside.
Yeah, absolutely. The market has been under a lot of pressure in the last few weeks, right? Where did it peak? It peaked right around December 6th and has basically not been able to catch a break since that point. Down from the bottom of yesterday's candle, we're down about 5.5%. From the top of it, where it closed, about 4.5%. And CNN already has their fear and greed index in extreme fear. Look, if we're hitting extreme fear down 4.5%, you haven't seen anything yet. You have not seen anything yet. Like, when we actually have extreme fear, it's going to look more brutal, more bloody, more red than you've ever seen in your entire life. We just scratched the surface here. So I'm not calling for a crash. I'm saying if that's where they feel extreme greed is, or extreme fear is, well, you better watch out.
Now, what I'm going to be watching for, and the title of my last video was, we need to be getting ready to potentially buy the dip. But I thought I would qualify that statement with a little bit more.
Okay. Before he qualifies that statement, I adamantly am against dip buying. By far against dip buying. Significantly against dip buying until the dip resolves itself. In fact, if we look here on the SPY, right? If you bought this dip right here, okay, it would have worked out, right? After it finds its bottom and comes back up, right? But not every stock's going to do that. In fact, if we go to Intel again, and you bought the dip, right? If you bought this dip right here, or you bought this dip right here, or you're buying this dip right here, like you're getting decimated. Just because you buy the dip, there's no guarantee that that is where it stops, right? There's no guarantee that that is the bottom of that dip. The bottom could be hundreds of dollars in some cases, or tens of percent in other cases, well below where you're buying it in, right? If you're collecting shares at $19, you don't know where the bottom of that dip is, right? But you can wait. You can hold tight. And especially, it doesn't matter if you're a long-term investor or a short-term trader, right? You don't want to be buying anything as it's going down. You want to wait for it to find its bottom and then start collecting those shares when it's on its way up. Now, how do you determine that? It's super simple, right? It's the outlier trend template. We talk about it literally every day in every video. It's your 10 EMA over your 20 EMA with price over your 50 EMA, right? So that's what that looks like here. 10, 20, 50, all stacked in one direction. And then when they turn the other direction, that's a southways, a downward trend, a bearish trend right there, right? But you want to be waiting for them to all be pointing north. And it's been a while. It's been a while since Intel's had all of them pointing north, right? And that doesn't mean it's going to last forever, one way or the other, right? But if you're buying dips as these moving averages are pointing down, right? This is a great example right here. If you bought this dip at $41 in April, and then that dip went from 41 on down and down and down. And maybe you thought, hey, we finally found the bottom here at 34 when it's down 17%. And then it totally faked you out because you weren't paying attention to the moving averages. And then it goes down another 13%. So cumulatively, this is down, move that one, 26%. That really, really the kind of dip you want to be buying? Not me. Not the kind of dip I want to be buying. I want to wait to see it cross back up, right? And in fact, this right here, it did cross back up. It did start a new bullish trend right here, but it gave you warning signs, right? It closed under the 10, it closed under the 20. And here's the thing, right? Like I say, long-term investor, short-term trader, it doesn't matter. These are warning signs on the chart, right? This is a big red flag, a big yellow card on the field, right? To tell you, watch what's happening. Something's not right. If it's closing under the moving averages, you had advanced warning. The trend was already pointing down before, in fact, I'll go right here where it's all crossed over, before a 37% move down, 38% move down in a single day. You had warning. So don't buy dips.
Explanation before we get into this week. I'm not going in and buying on Monday, and I may not be going in and buying on Tuesday. If we continue to have red days, I'm going to be patient and I'm going to let it come down. The only way that I would be a buyer of this market or a buyer of the dip is if I saw a flood of volume and a green momentum candle, and specifically an engulfing.
Okay. I don't look at candles, but that's okay. He can use those, and that's fine. But what he's showing right here, right? Let's just draw it right on his chart real quick. What he's showing right here is, imagine your moving averages are all coming in and maybe they're all pointing down, right? Your moving averages are all pointing down. But then you've got this reversal here where they all start crossing back and moving the other direction. And then they're all pointing up again. That's what he's describing. He's not putting moving averages on there. He's using it through a different type of pattern. You know what? You do you. But that's exactly what he's describing. You can see it on the chart. And I appreciate him showing that. You can see this. I know it sounds crazy. I know people say you can't time the market. But when you look, when you pay attention, you can see what the market is doing. You can see it. Now, that doesn't mean it's going to last forever, but the market's telling you where it's going. It's up to you to listen and read it, right? Remember back in middle school when you didn't know how to play the trumpet or you didn't know how to play the flute, right? And then you went into band class and you took 6 weeks to even learn how to push the buttons the right way, how to learn how to put your mouth correctly to make the notes come out, right? At some point, you actually learned how to read all those scribbles on the page that turned into music. Same thought here. This market is telling you what it's going to do. You have to be able to learn and read that, and then you can start being successful in the markets.
Candle that would push us back to the upside right before the inauguration. That's what I'm going to be looking out for. Otherwise, this is a market in decline, and you don't want to go against the trend until we see.
All right, thank you. Do not trade against the trend. Listen, I lost, I would say conservatively, $200,000 betting against the trend. And then at some point, I was like, I wonder if instead of being a contrarian trader, I wonder if I just went with the trend, how much easier things would be. And lo and behold, it was like God came down, shine the light down from heaven. It's like, oh, this is how you're supposed to trade, dummy.
Evidence of a trend reversal. Okay, let's talk a little bit about who is reporting earnings this week. On Wednesday, we're getting a lot of the banks. We've got Chase, Wells, BlackRock, New York Mellon, Goldman Sachs, and Citigroup. And then on Thursday, we've actually got an interesting company. I will cover it this week, TSMC, but then more banks, U.S. Bank Corp, Bank of America, Morgan Stanley. And then Friday, we've got Citizens Financial, Webster Bank, State Street, and Regions. And then even more the following week. So the first part of our earnings cycle here is going to have a lot of the banks. And I can tell you right now that if the banks are doing poorly, that definitely signals or pre-signals a coming recession, which optimistically, if this week we begin to get some good earnings reports from the banks, it might show that the economy is strong and that there's a lot of business going on and that we're not falling into an early recession. So this would
earnings for banks should be really good. I mean, when interest rates go up across the board, banks make money hand over fist, right? Because they're not paying you, right? When the Fed went up, 500 basis points or whatever it was, they are able to charge so much more across the board for every loan that they send out. But they didn't raise your deposit rates by 500%, did they? No, of course not. You might have gotten 5 basis points out of that. So the other 495 basis points they get to keep, right? That spread grows huge in the financial sector. So they should be putting up pretty good numbers. I'm just saying.
Also be another indicator of a strong economy. And then, like I said, next Monday, we've got the inauguration, and then we've got our first big tech company, Netflix, reporting earnings on Tuesday, and it could line up for a potential bounce. Now, I also wanted to clarify this. Even though I do see a potential bounce because we're in an oversold state, and I don't think that the markets are going straight into capitulation this week with heavy selling. I don't really see the justification for that. I do believe that we're in the beginnings of a bigger correction, which largely will be realized possibly through this earnings event. So we're going to see how the market reacts to big tech and if they hold their ground and maybe even come up a little bit. Or
so this is what's great about the market, right? Everybody gets their own opinion. Yesterday, we covered a video where the guy was saying how there's no chance that there's going to be a bull market. Everything is going to go up. Just, relax for a minute. We're going back to the moon on the market. And then Stocks with Josh today is saying, I think that there's definitely a deeper correction coming. We haven't seen the bottom. We're not even close. And, that's what makes the market. That's how prices move up and prices move down, right? There's value from both sides where somebody's looking to profit. So I really appreciate that.
Whether we get into a heavier selling environment, but you need to be prepared that you don't buy the dip that turns into a recession. So that's why.
There you go. Don't buy the dip when it's continuing to dip.
We're watching closely for the opportunity, but it needs to be confirmed with green, high volume, momentum, and golfing candles to the upside. Otherwise, we don't want to touch this market. But the company we're going to talk about today has already been beaten down, and it's getting very close to what I would say is a higher reward opportunity than to a risk opportunity. And we're talking Intel. All right, we're looking at monthly candles. Each candle represents a month of price action. So this is quite a span of years. It had been in a historic ascending channel for many years, which we often talk about the fact that as long as a price stays inside an upward ascending channel, it's bullish. It's only when it breaks outside or beneath the channel that the trend breaks down.
And you don't have to be a charts wizard. You don't have to be a chart wizard to do this on here, right? In fact, I don't draw channels at all. And we're going to go on to here and we're going to go to the monthly chart like he's doing. And we are going to zoom out. In fact, let me see if I can see where that, I can't tell his time frame here. I don't know where the left side of the chart is here, but if I zoom out a little bit, looks to be about like that, right? And then, right, you throw those 3 moving averages on, the 10, the 20, and the 50, and it correlates, right? So If you're on a monthly chart, it'll show monthly moving averages. If you show on a daily chart, it'll show daily moving averages, whatever. But those moving averages pointing upward, right? Which is this right here. They're pointing upward. And then I'm telling you, right, you don't have to be a chart wizard to see when the pullbacks happen like this. You don't have to draw that on the chart if you don't want to. Just let the moving averages, which are just math, show you the exact same thing.
And you can expect a strong sell-off, which we've actually been in now for 1,491 days. You absolutely cannot have any FOMO on this one. There should be no fear of missing out because, like I said, this has been trending down for over 4 years, and the trend is clearly still pointing down.
And there's been a lot of people, I would bet you, who have been saying every red candle, every dip on here, buy that dip, buy that dip. And as you've seen, you don't know how low the dip is going to go. So buying a dip is dangerous.
Now, 1860 is a triple bottom support. And I've talked about these types of things in the past. We've got 3 monthly candles, which have a very strong defined support level.
Right on 1860. I wonder how that correlates to the order blocks on here. So this order block is right around 1860. Who would have thought?
At $18.60, which means that if this level gets broken, we're going to get another leg down. And where is support? Support is largely going to be all the way down at $16 and even as low as $12. So it's going to be in this region. But I really do believe at this late hour of Intel's decline that you're going to see that there's a lot of investors on Wall Street that are going to find the money to drop a little bit in Intel at that low valuation, ridiculously low valuation. And because there are wheels of industry and new relationships forming in Washington, D.C. between American companies and this new administration, and those types of deals are the deals that could prop up and reverse Intel's fortune. This is a company that supports a lot of American jobs, and it is a company that politicians have fought to support and keep alive. With new management, this could be finally knocking on the door of reversal. Now, let me just share with you guys that as far as a confirmation of this going higher, that isn't going to be had until we get back above $20. And if you're shorting Intel at these levels,
there you go. Confirmation that it's going higher. You want to see the trend reverse and price going up first. Price going upward first. Okay. All right. I'm getting on with this video.
You would want to close those shorts and have a cover if the price moved back above $20. But as we're going into this week, I am watching very closely this $18.60 price range, because this is the one that if we close a daily, weekly candle underneath, it's going to confirm a move down to 16. Now, let me just point out one more thing to you. The move from 1860 down to 16, well, that's a 20% potential drop in share price. But if this company truly begins a reversal moment and is too big to fail and does have the support of the new administration, the opportunity to go back to all-time highs is where this gets very interesting. To get back to all-time highs, this could go up 400% if we dip down to this $16 level. And
okay, hear him out. Could. He's saying it could. It would take a 400% gain to get back to all-time highs. He's not saying that that is going to happen. He's just relaying the math of if it's going to go up to all-time highs, that's a 400% move. Could it happen? Anything can happen in the market. Okay.
I believe that this company could do that. It's just going to come down whether or not they want to play nice with the Trump administration. This is one that is still going to take a little bit of time. The trend is to the downside, but I'm going to say that we might be within 30 days of the bottom and the reversal on Intel. And you haven't heard me talk about this one much.
I wonder where he's getting that from. Just like a gut feeling. I don't know. Like I say, the trend is your friend until it bends. And right. He may have been calling for the trend to end here, and then it just goes down all of April, all of May, just totally gets decimated, right? We don't know where that is. So I don't want to put a lot of stock in a date, and I don't think it's appropriate to give a date, because you're going to give people hope and they're going to say, okay, well, if it's going to go up in 30 days, I'll just buy it now, right? If it's going to go up in 30 days, why not just buy it right now? I don't think putting a date on anything is an appropriate thing to do in the markets. Let the market do what it's going to do and then just go along with the ride, right? We don't know where we're going to get in. We don't know where we're going to get out until the market decides this is the way that things are going to go. This is the point where we're going to change. So I don't like that he gave a date, a 30 days out date right there, because I think that gives potentially false hope. And so let's do this. Let's rank this video real quick. Right here. So here's our ranking: forgettable, painful, frustrating, mediocre, meh, decent, impressive, epic, legendary. I'm gonna throw this in the 6. I'm gonna say decent. He had a lot of good points. He definitely talked a lot about how you need to be watching what's going on with the trend, and I really appreciate that, because so many people on YouTube, which is what I like to cover, come on and just basically pump a stock for no good reason other than, hey, the stock is down, you need to be buying it. Bro, are you kidding? There's no justification that it's ever going to go back up. Okay, it could go down 75% like Intel has before it starts going back up. I, for one, would rather wait until we're on the other side of that move rather than getting in and holding it all the way down, right? The mental capital, the stress, and the fact that you're locking up funds that are just losing money day after day, we can just wait, right? So tell me in the chat what you're trading. I'd really, really love to hear what you're trading out there, and come back tomorrow where we're going to help you save time, make money, and start winning with less risk together as a team here in the Outlier Trading Room. Have a fantastic day, and we'll talk soon.